everyone, welcome to Tuesday's free market report. S&P's pulled back to the 8-day EMA here yesterday and held, which is pretty okay. This could be the high. Could be. I mean, it's just, nothing's definite obviously in trading, but this could be the spike high. But the fact that we pulled back and got this sort of hammer doji off the 8 EMA is okay, pretty bullish. Looking at a 5-minute chart here for the S&Ps. Let's look at a 5-minute chart for the YM. Let's look at a 5-minute cash session futures chart, and you can see here we've got this, really good rally into the close. There was a low down here of 11.38, rallied up to a high of 11.46. So decent rally there in the last couple of hours of trading, which is pretty bullish again. A trade that we took yesterday, which is working out very well, is a short in crude oil. We are trading the July contracts, even though I think the active contracts will probably, it's March and that'll roll into April. But we shorted this at 81.70, so really nice trade. $1.20 in the money already. Now sitting back on the 50-day EMA. I'm looking for a first target of $78. First target is $78, which would be a very nice trade. We added to this position as recommended. Let me just put the actual contract we're trading. Now we have a 60-minute chart. What we was looking for, we go back to yesterday, and then we was looking for, it's a bit thinly traded, this stock, but this contract, but it's okay. We should be okay to get in and out. We waited for it to trade below $81 for an hour, which it clearly did here, and then we added to the position again, shorted at 81.70, then shorted again when we got an hour. You can see the level there. Well, 81 is there, and we got that candle below, and then you can see we've just come back. Let me just draw a line on that so it's easier to see. What we did there was we had the candle there, was the hour below, then you see it just came back, tested it, and then since then has rolled again. So that's working out pretty nicely so far. I wasn't in the trading room yesterday, won't be again today. We'll be there Wednesday, Thursday, Friday, and then what we will look to do is, and I'll mention this in the free video, is we'll look at some open interest plays for futures. What you normally get is coming into, it's options expiration this week, coming into the last couple of days of trading. What we're looking to do is see where the most open interest is on options, and we look at stocks such as Google, RIM. See, RIM's looking okay, a little bit toppy, a few spinning tops, but it's okay. Volume, see there's come off. We'll take a look at BIDU, which is sort of like the Indian Google, which just made the most incredible move yesterday. I wish I was in the live trading room. Hopefully we'd have got a piece of that. But this went up like a spaceship, this stock. It really did. I mean, look, it was up. Where did it open? It closed at 550, and then it had a high of 625. So that's like $78 up at one point. Incredible. And that would just be a killer stock to trade intraday. Although I know a lot of people struggle to peel off their profit. I just couldn't get filled even with options with a stock at the market, because as quickly as it went up, it just came off so quickly. But we look at stock like this, and what we do is we see where the most open interest is, and then what we normally look to do is buy the calls that are slightly in the money, looking at for it to gyrate to where the most open interest is, and sell the calls where the most open interest is. So that's normally I go one strike price below where the most open interest is, and then to buy, and then we'll sell where the most open interest is. So we have like a vertical spread. What normally happens is the stock price will get pinned to where the most open interest is, and then our calls that we buy in the money will obviously make a bit of money as the stock gyrates to that price. And then dances there, gravitates is the word. I always mix them two words up. It's gyrating, it's jiving to that price. Stop it, Martin. And then we're looking at, so obviously the calls that we sell gives us also, gives us a little bit of a hedge, and we're looking for the price action to sort of do something like this. Let's say it's pinned up, so it's like 600 is the number. So you're looking for it to sort of like, you buy the 590, sell the 600 calls, obviously the March ones, and you're looking for the stock to move up to 600, and as it moves up to 600, looking for it just to consolidate, come off a bit. So you need the 600s obviously, you know, it's trading at 580, you're just selling time value. So already looking to sell that. So even if it moves to 600, I'll say like buy the 590s, they'll make $20 odd if indeed that we're trading at this price when we do it tomorrow. And the 600s, which is all time value that we've sold, will just eradicate that. Just, you know, that will just decrease, obviously, because it's only time value. Moving into options expiration day, that's just going to be worthless. So we'll discuss that more tomorrow. Obviously, we discussed that more in the members, and I'll be taking them trades probably in the live trading room on Wednesday. So keep an eye out for that. Okay, everyone, that wraps up this free daily pre-market report, and also it's sort of, as you can call it, the free daily market report. We're trying to add some educational stuff in as well. Look forward to speaking with you again tomorrow. Till then, happy trading.